Welcome back. In this video, let's understand the term securities, and we will also look at the various securities that get traded on exchanges. A security represents terms of exchange between two parties. For example, a stock is a security which defines your percentage ownership in the firm. This security has no maturity date. As long as you own the security, you are entitled to a proportionate share in the profits of the firm. Securities are issued by different institutions like corporate, governments, banks, or other financial institutions. Securities are purchased by various investors who have surplus money to invest. Securities allow investors to convert their savings to financial assets that can provide them returns. The issuer of the security proposes the terms on which they are raising capital. The investor who invests in these securities has the claim to the rights represented by the security. These rights may involve ownership or participation in management or claims on assets. Stocks are not the only type of securities that get traded on exchange. Different types of securities belonging to different asset classes can trade on exchanges. The exchange decides which securities can be traded after taking due permissions from the relevant regulators. Typically, you will find that stocks, corporate debentures, bonds, government bonds, close-ended mutual funds, and currency futures get traded on the exchange. Also, derivative instruments like futures and options, which derive their value from one of these underlyings, also get traded in the derivative segments of the exchange. It is up to the exchange to decide which securities would have derivative securities also available to be traded on the exchange. Before we move on to more details around stock trading, I would like to introduce the term stock indices to you, because we may be referring to this term in later videos as well. So in the next video, we are going to understand what is a stock index. So see you in the next video.